CTM. What is going on, everyone? I hope you are well and doing great on this Tuesday, Taco Tuesday. How about that? Bitcoin, $57,000. How about that? It almost makes you think. It almost makes you think that 55,000 Bitcoin is cheap. How about that, everyone? Today, we're going to go ahead and we're going to be discussing a few different things on people's minds. We're going to look at number one. We're not in this order, though. I'm going to go at a free flow pace, but make sure to answer all of these particular things. How would you identify this cycle breakdown? Will we potentially see a drawdown in the range of 10 to 20% prior to the halving? Is the 4-year cycle fully broken and has everything changed, right? There could be some things such as the ETFs here. We're seeing funds flow into them. Has that changed the dynamic that we've been looking at of the 4-year cycle? We're also going to be taking a look at where we are right now. Like, what happens next? What happens now? Those of you that have been paying attention, you all are quite familiar with and know that as price was down over here, below 40,000 right after the spot ETF launch, our expectations were set that, you know what, likely what's going to happen in the month of February, that we would make a new yearly high. And then chances are next bit of resistance is up around $57,000. We've done that. We've tagged that. And we're also going to be looking at whether or not the likelihood of a left-leaning cycle is increasing. When we were down over here below $40,000, it was put out that, you know what, February is normally a very green month. We have a lot of seasonalities in traditional finance pointing towards liquidity continuing through the first part of February. And because of the momentum we have over here, that even though people at that point were believing this was a sell the news type of event, we held strong that no, our expectations are that in February, likely we hit a new yearly high and then work towards that 57,000 pocket, which is where we are today. And it's an absolute joy to see and watch and be here with you all as that occurs. Now, we have hit 6 months in a row right? It's from September, October, November, December, January, and February, 6 months of all green. It's happened before. It happened over here in 2020 to 2021. And then we went to pretty much a break even month and then some significant drawdown. You remember that May down through the summer, significant drawdown. And you could see that the last time that they were 6 months in a row, this is the price action that ensued. And it was this accelerated liftoff. Here we are again. When I say here we are again, I mean that, well, we have, first of all, a couple of things that I want you to see on this chart, right? Number one, each time we've broken out from this yellow trend line, what has ensued has been accelerated price action. There's just observations of what has happened in the past. Now, will that happen again? Is that happening right now? When will that be invalidated? Are all questions that we just want to know and understand so that we have that awareness about us, right? So the next observation I can make is that any time in the past that price has touched the 0.786 retracement fib and then broken above it, that's also led to accelerated price action. It happened over here. It happened over here. And each and every time so far. Does that mean that that's going to happen again right now? Well, I think that you should be aware of it and you should be watching for it. And most importantly, being that we have broken above it and we've never done that prior to the halving before, that is different. Does that mean that the 4-year cycle is different? Right? Or, you know what? Does it really matter? Or the fact that we've broken above, well, let's pay attention and be ready. Like, throw out all your expectations about what you thought was going to happen. A lot of people thought that this was the high prior to the halving. And then we've seen a lot of dynamics change. We saw it all started with the catalyst was the court ruling in favor of Grayscale being able to roll their fund over into a spot ETF, BlackRock application, Fidelity, and a whole host of other applications not only approved. There were some people who thought that was a sell the news type of event, that like with these avenues and on-ramps from public markets into Bitcoin and flows coming in, that would be a sell the news type of event. That's not what we're seeing. Now, don't get comfortable. As we talk about all these things here, as Bitcoin is at 57,000, don't get comfortable and or take anything for granted. Yes, we are pretty close now to tagging a new all-time high on Bitcoin. We are seeing positive signs, but that does not, well, anyway, we'll get into that. We'll take it as it comes. Let's go ahead and just make a few more observations on this chart before we continue to move forward. One of the things that we're going to be looking at throughout this whole time is, well, what happens next? Jordan, that's pretty cool that you were able, in the face of fear, to say, you know what, like there's a good chance that in February, that we make a new yearly high and then tag 57. Now that we've done that, what happens next? I see a lot of people getting really like euphoric and excited, and I'm just, I don't want to get burnt. This is usually the time when people make mistakes, so you can't get comfortable. So let's take a little bit. I just asked for this is a great question. Like, have you taken any profit? It's a fantastic question. Are you taking profit now that we're into resistance? By the way, one observation I want to just point out on this chart here that we're looking at is, do you see this line over here, right? The line that I have throughout this chart, structural line, and you could see it coming off the top over here from October into November, and it's the same trend line. And if I were to move it up over here, ding, 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 you would say that you see the perfect touch. It's just the structure of the market. Is it important? Yeah, it's important. Is it just another trend line that you need to manage risk around? Yep, that's all it is. but it's important for awareness. And what awareness has shown me right now as we come into this area of resistance, it's like 57 into, just below 59 in this area. And you can see that trend line over there, that trend line, that wick down into that area, right? That's where we're into right now. That's an area of resistance. Are you taking profit? You know what? We just actually yesterday evening took a new trade. So we'll talk about that a little bit in a little bit. But what I want is a lot of patience. A lot of people, especially on crypto Twitter, and crypto Twitter can be quite confusing. There's a lot of people with a lot of different ideas, and you probably don't understand, first of all, what time frame they're trading, what their time preference is, right? And a lot of people could be having discussions about the same thing, and all of them actually could be correct, but a lot of them, the way that it's presented, there's a lot of moving goalposts, and that continues. And we try to be as correct and as exact as possible. That's what's very important over here. So we will answer those questions, but since it's up, right, we just took a trade over here. We just entered the market. You could see that coming down off of when price was below, when price was over here. But this is the ETFs. We were holding long into the ETF launch, and then shortly thereafter took profit and got out of the market on the sidelines for that whole big dump. And then took a couple of most trades go nowhere. Hold on to your winners, let go of your losers, and let go of the ones that aren't doing anything. And then riding out of it, we were able to take a nice trade, and then we're just positioned long now. We're not exiting that trade on Bitcoin. On Bitcoin, we let go of trades very quickly. So if this momentum rolls over, we'll be getting out of the trade. As it is, most of the trades we take are counterintuitive, at least for discretionary traders. We're momentum traders, and we're very often buying into resistance, and we're very often selling into support. It's just you wouldn't think it's the thing to do. And I'll show you an example. Many people are familiar with what happened in March. In March 2023, we had that banking crisis. This isn't set back from March. I'll show you on this one over here. Let's set for a very specific date on purpose. This was when all of a sudden they came in to open up the BFTP program and provide that liquidity. And Bitcoin made this massive move up. Most people thought it was very overbought. And we're taking a long over here, right? We're following the momentum. And again, most people, that's counterintuitive. They wouldn't do that. And you could see that how that worked out. Now, I'm going to go with the flow here and answer all these very important questions. So I'm kind of getting the work out of the way. And Ethereum continues here, holding a very nice position, right? You're looking here on the left is always CTM 2.0, and on the right is CTMX. CTMX is just an overlay and added filters on top of CTM 2.0. And then over here, you have those that are trading on the daily. And there's a big difference between Ethereum and Bitcoin in so much as that Bitcoin is very quick to let go of its trades to take profit, whereas Ethereum holds through a lot longer. And you can see in this last particular trade off the bottom over here, Bitcoin has taken a few different trades, and Ethereum is just holding on to that one trade. That's part of the beautiful dance that we have going on over here. Cardano is in an open position over here. It's 6% into profit. It's not really going anywhere yet, but I feel like thus far on the right side. And what's amazing here about Solana is it just continues to be avoiding anything. It's on the sidelines, and Solana has been a massive outperformer in 2023. Massive outperformer in 2023. Right now, as Bitcoin and Ethereum are kind of doing a lot of the work, it remains on the sideline. It seems like the right thing. What you're looking at over here is the blue line is the high water mark. This is intra-trade basis, how high profit has gotten without closing trades, without closing the trade. And the green line is the account balance. You can see over here right now, Bitcoin continues to make new account all-time highs. Ethereum right now on an open trade basis is making a new account all-time high. We don't know where it'll close the trade yet. It could close it up or down from here. We just don't know. And even though you're seeing Cardano here coming off a little bit, that's where it took profit. On a closing basis, it's trading at an all-time account high over here. So I thought that would load, but it's not loading, so I'm not gonna worry about it too much for you. And Solana, you can see on the sidelines this whole time, avoiding that sideways price action. It has done a lot of the recent work lately, putting in tremendous gains. So right now here, it is just on the sidelines. And so the question is like, well, have you taken profit? No, we just entered a trade. See, we're not going about this trading this discretionary whatsoever. Try to give a lot of people awareness that are looking to go ahead and have someone's view to go ahead and manage their risk around. But we're just entering the market. We'll get into that in a bit later. But there's a lot I want to discuss first, and I want to just go ahead and make sure I have this list up over here. And so, well, how would I identify this cycle breakdown? Let's start with that. I think that's a very important question to tackle and to address. And I want you to focus first on two lines. The first line I want you to focus in on is this line here at the bottom that I'm highlighting, and the line right over here off the top. It's the same line. We looked at that before. You know that it's just the structure of Bitcoin market. By the way, that goes back well over 10 years on Bitcoin. It's not just during this bear market. Now, as I'm looking at those two lines, I want you to focus on this line over here, the bottom line. And you could see this line over here. I'm going to add this line now. This was simply a trend line on a log scale connecting the all-time high to that March rally, right? And then extending out. And that was a confirmation that there's a good chance that the bear market is ending once it was crossed. This stuff was pointed out on crypto Twitter in real time. Now, that's good, but isn't that neat how once breakout, retest, resumption, you see that perfect retest of the line? And then we had the banking crisis. Isn't that neat how that line held again? Or was it this one? You see the touches over here? You see the touch here? And then again over here, right? If I could get that, if we wanted to get that a little bit more exact, we can, but you see what I'm talking about? And that one, the bottom one I'm showing you, is a little bit more más bueno, more correct. By the way, if you're watching this here and you want to spread some love, and anytime you enjoy what you're doing, the time you're spending with the people you're spending with, and most importantly, learn something new, go ahead and smash that like button. It really gets me pumped up over here, helps me find the flow and drop some nuggets. That's what I want to get into. So let's go continue over here. So that's late. This line is late over here, right? We called back in December, check the channel, the YouTube channel, we called the bull market breakout above 17,250. And price broke above, and then we had a sell impulse, so we had to get on the right side, on the short side, until we closed up again. But that's early, 17,250, right? And since that happened, what we've been doing is looking for where we're wrong. Where is the invalidation? Where does that bull market breakout end? Because you never know if you're right. You never know if you're right. You always want to be looking for where you're wrong. And thus far, what the bull market breakout invalidation has been this trend line. And thus far, it has held. And we've come close once. We've come close twice to it being tested. And that is probably the most important awareness thing to look at. Now, we have other things, and many of you will remember a very simple trend line. And it was over here from the July low. This was the first wave. And then it was the test of the first wave into that second wave over here. And you could see over here that this is 53,140. Now, that was the first breakdown. Hey, take profits. Something's not right. That was supposed to head up. It's not. Now, I just want you to notice what we're using here is a sell impulse, an invalidation. Now, we're going to see if we could use that going forward because even though we've had the bull market breakout and it has yet to be invalidated, we've now entered a new phase. We've entered what has been historically the launch phase, right? And so you could see here during that trend line we just added on, to 53,140. Well, I'm adding that line over here because that would be the first sign that this launch that is taking place right now, something's wrong, right? If that were to happen and we were to break this trend line, well, I personally think, and we're going to look at some other awareness points in just a moment, and we're going to get really detailed to hitting some type of price action that we've hit in the past, right? Going back these other cycles. Now, this cycle that we're currently in, it does resemble off the bottom up until right now, a lot of the price action from this period over here during the 2016 halving. And notice this was a bumpy ride once you crossed above the 0.786 retracement fib. You saw a quick, this is a massive 40% move up, 40% move down, another 40%. I mean, most people would get absolutely, completely, just absolutely wrecked if that were to occur. So that's one awareness point. We're going to check them all off. The question is, and the question that needs to be talked is, what would identify this cycle breakdown? We're answering that in twofold. The first one is that this trend line down over here, this would be a massive breakdown. I don't think that's in play right now. I think right now we've entered what is this launch pad over here. And what we're looking at right now is where that move is currently invalidated. This is number one awareness point that we're going to look at, but we're going to get a lot more intricate about it. So we're going to pause there, and then we're going to come back to how it identify this cycle breakdown. What about the 4-year cycle? Is this fully broken and has everything changed? I think that in order to answer that question, and we're putting all these together at the same time, we're going to start off with looking at this chart that many of you are familiar with, and this is simply lining up past cycles from the halving. We have over here, was it May 10th or May 11th, 2020? I don't really remember, but we're going to look at and line up the past cycles, right, from that particular point where they each had their own particular halving. And we have this cycle over here, and it has this really sharp up move in the beginning, right? And then it went through this long consolidation and then a second move up. Just pay attention to that, because as we talk about whether or not this is a left-leaning translated cycle, that might come in handy, but we're going to first continue talking about whether or not the 4-year cycle behavior is still relevant. And we could look at where we, in relation to the blue, the darker blue, where we peaked, right, in November 2021, compared to where we peaked in that cycle, December 2017. And they're approximately as many days past the halving, as well as where they bottomed is approximately as many days past their halving. And I think that simply just looking at the pattern that you see between the two, that it would be silly to say that there's no similarities or that the cycle is broken. And we're not getting into whether or not what drives the 4-year cycle. Is it the halving of the miner's reward? Is it liquidity? Yes. Or what have you. We're not getting into that, as we did not go into a parabolic move this past cycle. We here at CTM said, you know what, even though I believe that we have likely some of the best cycle awareness out there, we're not going to use that going forward. We're going to lean into our TA and simply develop a mechanical edge. And that's what we did. We spent the bear market absolutely building, and we've had pretty good 4-year cycle awareness. You could come back into March and talking about looking to touch the 0.786 retracement fib before the halving. You could look at, if we go down a little bit further, it was back in right? We started in January putting out 4-year cycle behavior remains undeniable and pointing out the 0.7 inch retracement fib before we broke that trend line of the bull market. And even though that we have that type of strong awareness, we don't lean into it. We don't use it. We've developed the hive mind, the collective, the whole team, right? The whole team together has worked very hard at developing a mechanical edge that's able to go ahead and execute in the markets. And that's what we lean into. Nevertheless, we want to have the awareness about us. That's what we're doing today. We'll continue with it. I think this is very important. This is lining up the cycles. If April 2021 were the highest price point, right? A lot of people think that it was the structural high of this past cycle. And I go both ways. I view both ways. And I just want you to see if you were to view April as the all-time high over here, you could say that, well, there's a lot of similarities in the cycle, including this up move. Yes, this had the largest up move compared to 2016 halving, compared to 2020 halving. They all capitulated more or less around the same time. And since then, there's that slow rise up. And this cycle, if April was the high, is now entering what would be that launch phase, that blast off. So, you know what? I think that there are many more similarities here than differences. And that's the only observation that I'm going to make. But November was the high. November 2021 was the high. So we're going to take a look at that. And what similarities and differences do we have? Well, again, I could say, well, they all bottomed pretty much around the same time. This seems very different. The degree, I could also say that Bitcoin in this particular cycle, the white one, this came down 85%. This came off 84%. This only came off 76%. So it was subdued a little bit in volatility. So was the upside, subdued a lot. It was drastically diminishing returns. It wasn't diminishing returns. It was drastically diminishing returns. And I could also say right now, well, this seems very different. We've never came so hot and high coming into the halving event before. I would say that that seems very different. And you could see that, like what normally happens around this time, is an extended accumulation period, pretty much running flat until about 6 months after the halving where we take off. But we seem to be taking off earlier. And does that have anything to do with past cycles rhyming? Was April the structural high? Or does it have everything to do with liquidity? By the way, NASDAQ's trading at all-time highs, right? We are seeing very similar behavior across markets. Or does it have a lot to do with the main catalyst that has opened up a massive amount of inflows into the market, and that is the approval of the spot ETFs? And we continue to see a lot of funds flowing in on a daily basis, a lot more than most people anticipated and or expected. For sure, that continues to drive price. What would happen if we saw equity markets come under any type of pressure? Well, I think that's a good question, right? And by the way, where we are right now, if you look, we're at the end of February. This in green over here is an election cycle, S&P 500 seasonal pattern during an election year when the sitting president is running. President Biden is running again, and you could see that around this time and through towards the end of March, there's a correction in traditional markets. Now, traditional markets, by the way, have not only shown a little further upside, but have extended that through the 3 weeks of February. That's also a little different. We just looked at Bitcoin being a little extended compared to past cycles. Just because these are seasonal patterns doesn't mean that they're going to play out. And you could see, by the way, all election years, right? And you could see that usually from that period over here, around the end of March into April, why we base out all the way through June. What's supposed to happen in June of this year? Powell was on 60 Minutes recently, and Powell was saying that, you know what? Listen, this is not political. politically motivated, but we are planning on beginning the cutting of interest rates around the summer. Now, usually when the Fed is cutting interest rates and they're not cutting into a recession, it's quite favorable for the markets going a year out. It's quite favorable. Is it possible that we continue to see some type of similar behavior running into? I think that this would be my base case. I know that we've just entered liftoff. I know that there's a lot of, let's say positive feelings, and a lot of people are very excited. But this is what my, let's say, my cautious, well seasoned self is telling me. Like, listen. Anyway, let's get back into it and let's take a look at some other things over here. And I want to take a look at specifically lining up for you what potentially is coming next. And I said that we wanted to focus heavily on what happens now. I think that a lot of people could say, yep, that's pretty cool that you guys had the awareness to look for that new yearly high in February, because everyone on my feed was getting really scared and telling me it was the sell news event and blah, 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 blah. And then Ethereum, it was just like, it was at historic low volatility, and I gave up on it. And now I see again that was likely wrong. And actually, I've been listening to the wrong people, right? So let's take a look at, before we get into the likelihood of a left-leaning cycle, let's look at whether or not we're going to see a drawdown of 10 to 20% prior to the halving and where we are right now. And we'll do that together at the same time. So I'm going to open up another chart to you. We'll start over here, and you could see that we are in this area. That's not the chart I want to show you. I'm going to come back to that though. I want to show you this chart. So before we do, I'm going to start with this chart over here. And I just want to point out one thing that's occurring right now. And many are you familiar? We drew this chart, right, well into the bear market throughout 2020. It was this massive descending parallel channel. And we did, not only that, we did a one touch, this line over here. You could see that price over here was following over here, but we did a one touch trend line coming into here. Pretty neat. At the bottom, you have that same structure of the market. Remember how earlier we were looking at the structure of the market and we were looking at those upward sloping lines? Well, for the bear market, this was the structure of the market. It's funny how markets do that, and all markets do that, and every single one of them has a structure. It's if you could find it or not. And then you can see we broke above, right? And then we broke down. I want to see the breakdown. Look, that's another one touch trend line after we broke out above, right? So we break down. We find that last bit of resistance to be support. And now you're going to see, once we look at that one touch, if anyone tells you you need 2 or 3 touches to form a trend line, they have no idea about technical analysis or the structure of the market. One touch trend lines are the only way to go. And then you see, again, it touched it again, retest, breakout, and it's on, right? And then you could see that since we've broken out, it's been a pretty big move. And I want to show you this other channel that's developed since, because we're breaking out above it right now. Now, normally, when you break out above a upward sloping channel, that leads to either a strong move to the upside that then fades, and it fades back and just to a mean reversion. It's not an end of a trend. If there's a big strong move over here, it'll then fade back and have a bit of a mean reversion. If it's quick, if it's just a peak above and then down, that could be very dangerous. So again, we looked at one point of awareness, and one point of awareness would be, well, if this trend line broke, hey, the yellow trend line potentially is in play, but we'll look at that from a different angle. That right now, just so you know, or we have that awareness with each other, is somewhere between 36,000 downward sloping, and then we'll go as far as June. And in June to, yes, between 34.5 and 35.5, around that area. All right, so that's one point of awareness. Another point of awareness is if we were to break back into this channel. We want to hold that now that we broke out, and we're looking for a nice spike up. If we are able to get above this resistance that we see above here into like 59,000, that opens up the door. The next bit of resistance, I would say, is either one touch off of that trend line. And just to tell you exactly what the zone is, let's take a look at it together. Hold on. Right? If we break above this trend line above, we're into that resistance now. That was our expectation, into that resistance. That's likely where we're going to find a bit of resistance. But if we break above this area, that brings up over here 63 to 64. That is right off of the all-time highs. Be aware. Be aware if that were to happen. Just another awareness point that we're throwing out there. But here, I want to get really intricate with you. So I'm going to start over here. Who remembers who was here live during the summer of 2020, July, when on a live stream, we called the bull market breakout? Now, that was good, and that was true. We had the breakout retest and then liftoff, and then now we've done it a lot earlier. Now we were able to call the bull market breakout 17,250. I mean, talk about sharpening your skills, right? Now, there are many people who believe that this whole move over here from November 2021 through this 14 month bear market, 76% drawdown, was still part of that same cycle, this same cycle. Listen, if you're doing something subjective, then you could call it whatever you want, and that's all fine. I've never seen Bitcoin in a bear market take out the previous cycle low. So either you're calling this all one massive bull market, or you divide it into bull and bears, or mini bulls and bears. Was this a mini bear and then a mini bull? This is a bear market, the way that I view it. And, being able to be on the right side that's what's life-changing. That's what's life-changing. But let's continue moving forward, and let's talk about what's happening here now in real time. I'm going to start off, and I'm going to go very quickly, but I just want you to see that first trend line that I'm taking a look at. This is tagging the December 2017 all-time high up into that April 2021. And then I'm going to go ahead and add that line over there. You guys should be able to see why we're looking at the resistance, right? Found support. You see that touch? And then this is the bottom over here. I'm going to add in some more. I'm going to add in this bottom one over here off of those two touches. You can see it very clearly. And I'm trying to give us some awareness points for where we are right now. So I'm going to keep adding these in. Isn't that amazing, right? Look at that one that we just touched. There's a little bit of resistance above us. We're watching that though. There's the next one. We just looked at that from a different way, right? You could see it into there, right around new all-time highs. And now I'm adding in this line, and you should be able to very clearly see what it is. It's June 2019 high, and then look at the touch, perfect over there into February, March. And then you could see how that line is very important as I continue putting it in. By the way, that's the global lockdowns low. You see that spike down? That was the last awareness point we call for people to de-risk below 27. The first one was 53,140. The second one was 35,000. And the last one was 27,000. 17,250 bull market breakout. And then I'm adding this line over here as an invalidation point, right? We looked at very early, this early invalidation point. And now I'm adding another one over here and down here. I want you to see where it came from. It's from this structural trend line over here. If we were to break below that line, I would be concerned that something's off. That's coming in right now, 40,000 and above. I think that's short-term holder cost, but I'm not really positive. I believe it's at 42. And then if I just add this one over here, you could just see where we last touched. I have that in as like an early warning sign. We don't want to breach that one as well. So I'm adding just 3 more lines in, and then we'll get to work. I'm adding this trend line over here. You could see the 1 touch, the 2 touch, right? You could see it over here off of the wick down. Resistance, resistance, support, support. Do you think it's important? I do. And then I'm going to add above where we just, you can see resistance, resistance, resistance. I would like to hold that line over here. Where is that line coming into? So we're into resistance right now. You, anyone would not be surprised if resistance held and then we were to pull back. On a pullback, yeah, we want to hold this line. This line comes down off of the low, the recent low. Let me get down to a daily time frame now with you. I had it off this peak, and now I'm moving off of the lows over here. And I would like to hold that line over here. That line is now coming above. It's around $51,000. I would like to, and if this move has meaning, we're going to hold 51,000, even if we hit into some resistance right now. That's number one. If we were to break 51,000, what's next? Right? So this line is coming in. It's coming in at the same place. Do you see that? Right? I mean, assuming we don't go straight down. If we go straight down, it's a lot lower. I'm trying to give it room. So as we continue moving forward and consolidate, that would be a confluence. That would be very important to be watching in that area. If we did lose this area, is it all over? We would be breaking down from over here, but we talked about this trend line over here, the yellow one, and that goes as low as somewhere between, let's call it 37 and downward sloping line over here. Let's take a look at what we else have around 37. 30, do you see the line over here? The red line, the one that we showed would be the invalidation. So I think that's pretty important. From the November high, I'll check that in 1 second, Ace. But this line over here, we had the red line from the outside, right? That red line coincides with the yellow line breaking. If those things were to happen, then I would say, well, we're looking at a whole different dynamic, and we're not looking at so do you all see we just covered so much about like what's happening now and giving it can't be answered in a Twitter comment. There's so much ridiculous nuance to it. And I think it's important to be able to lay it all out to help people be able to make those decisions. What about November? Let's take a look over here, the November high. And I think we're talking about this line over here, Ace, to see what's above us. Right? Oh, let me just go down off. That's coming in around 62, more or less, right? 62. I'm looking at some horizontal in that area as well, right? And so we got this over here, this March 2021 high. We tagged it again over here. That's a lot. That's great awareness, Ace, and that belongs over here. I also see it coming off of these two touches, right? And that 60,000 should be a hard. We talked about 57 to 59, but you all see the resistance above us over here. That's going to be a lot to work through. Getting above there, that opens up the door. And that opens up the door to, let's say, like, to new all-time highs and a test of it. But until then, that's some pretty big resistance overhead. Now, I'm not one to say we've come too far, too quick, or anything like that. If you were one of those people, well, then again, you thought around that area, 32,000 was pretty much the end of it. Follow price and let price do its thing. Let's go ahead and take a look at some advantages over here. Let's see if this is the 8-hour time frame. We talked about that awareness of that 53,140 breakout. Am I able to bring up? No, I'm not even going to do it. Let me just talk about left-leaning cycle over here. Let me come back to the map over here. And so we've covered, right, the 4-year cycle. Has everything changed? Will we see a drawdown in the range of 10 to 20% prior to halving? And by the way, what is that drawdown? How to identify the cycle breakdowns. We've really hit on. What type of drawdown would it be? Let's check out from both ways. Like from here into the line, I can't imagine that that's not in play, right? I would like to not look back after breaking above the 0.786 retracement fib, but don't forget it could get really jumpy, and just breaking or breaking below it, trading below it does not mean anything's invalidated. Here's your perfect example of why. Uh, that's right here at 49,000. We talked about why above 51,000 is extremely bullish. So that's the most bullish scenario, is we don't see below 51,000 until this current move comes to an end. And by the way, just let me reiterate one more time, seasonalities over the next month, they generally see some type of consolidation, pullback in traditional markets. I don't think that Bitcoin would be immune personally. It would be very important to see if we did see some type of correction. I don't want to even say correction, but pullback in the equity markets, how Bitcoin reacts. Do we continue to see inflows into those spot ETFs if that were to occur? What type of price action does Bitcoin keep going up? Does it really, have some type of separation from traditional markets? Does it have a healthy consolidation? What is it? We have to just make those observations, and rather than having some type of like idea of what the outcome is going to be on a daily basis, what you need to do is observe the markets, observe the price action into all the reference points we've just taken a look at together, and then continue to see, and making those observations, you have the awareness to know whether or not something's wrong, that's not right. Let me de-risk. And people have learned by right now, if you don't de-risk, you're going to pay the price for it. And it's such a massive advantage to de-risk down if you see something's not right. Right now, we continue to see everything being correct. And that all started and is being continually monitored. Again, not only during the bear market, the awareness point of 53,140, the $35,000 breakdown, the $27,000 breakdown. Those were all de-risking events, and they were called out very loud and clear, and including the bull. Many people didn't want to hear it. They didn't believe it. 12,000 Bitcoin. No, 17,250 bull market breakout hasn't been invalidated. Once we break out the yellow line, then we're looking at what has historically been, a nice, let's say, elevated run on price action. Does that mean it's going to happen again? Well, I'm not convinced. I'm monitoring it and I'm watching it. But if it does, then we are looking at what would look like a new all-time high, either before the halving. I mean, is it possible we have 7 up months in a row and March is an up month and we make a new all-time high? And or if March is some type of like, consolidation in regular traditional markets and Bitcoin just consolidates, is it possible then in April we make that before the halving, around the halving, right after the halving, a new all-time high? That would be highly unusual to make a new all-time high that close to the halving. If that occurs, does that mean that we're having a left translated cycle and that the all-time high is going to occur much closer to the halving event? I don't think so. I follow liquidity, and right now we've seen ever since March when we saw the banking crisis, that's really where liquidity has began to turn up. But I don't think we were out of the woods, and I don't think personally, if we didn't see a favorable ruling by the courts, I think that Bitcoin would have corrected much harder. I don't think that it would have found its bottom over here and then moved up. If we were to see favorable price action persist and a new all-time high, either before or slightly after the halving, that would look like, or the theme is going to be that we're having a left translated cycle. Many people are going to be looking then for a recession, a crash. All those things could happen, but where the Fed is at in the tightening cycle, they've already have gone to the pause. Not only have they gone to the pause, Powell's just on 60 minutes, giving a reference point from when the first cuts are coming in. Normally cuts into a market that's not into recession is quite bullish. A year later, you're looking at usually equity markets, double digit returns. I think that if we were to see some type of new all-time highs around the halving, and it's going to be like everyone's going to be talking about it, and I don't think it's going to look anything like this, but it could resemble where we have that double wave, right? Do you remember we were looking for January 2021? We put out the video, a double wave, and while we did have kind of wave one and wave two, that's not what we were looking for. We were looking for a much higher move here. I don't think this was normal to have this subdued diminishing returns that we had this past cycle. I think this time is actually different in that we have regulation, we have Wall Street, we have public markets, open on ramps through the ETFs. I think what happens as the Fed works through the next phase of the Fed cycle, which is moving towards the rate cuts, and then like ultimately that period between when they cut, and it's important how quick they're cutting. When they're cutting quickly, that's usually when market's under pressure. It's for a reason. But eventually, I think that they return to outright printing, balance sheet expansion. Once QT is ended, once the balance sheet's going the other way, once they return to outright QE, at that point, I think we're going to see Bitcoin make a bigger run than whatever happens, let's say, over the next 6 months. So those are things that I'm watching out for. So we're gonna leave it there for today. I sincerely hope that we answered all the questions that we set out to answer, and in the best way that we could do it. If we could make it up to 100 likes, that would be awesome. But anyway, thanks for being here, everyone. I hope you enjoyed it. Anyone watching this on the replay who has any thoughtful comments they could add, I would love to discuss them in there and get into it, the discussion with you all. Right now, have a beautiful day, everyone. God bless you, and I'll see you all soon.